Welcome back to the Contrarian, everyone. I hope you're all doing well. I certainly am. For those of you who might be new, my name is Logan Moody. I like to make videos talking about the markets, investing, kind of approaching things from perhaps layman's terms or just a more simplistic type of way of looking at things. And it tends to be, as the name of my channel implies, Contrarian. I can be somewhat against the crowd at times, and in fact, I've actually perhaps been most successful when I'm against the crowd. When everyone seems to be doing something completely different. And in fact, that's actually when I feel most comfortable about a certain position of mine, is when the crowd is, at a completely different conclusion than me. So, this video I'll actually be making looking forward to the coming week, kind of the major things we have coming up. Of course, we have several Fed members speaking, and this will kind of, I think, play into the Treasury market quite a bit in terms of where rates end up going. In terms of if the Treasury market believes the Fed will begin to cut rates, that could spur people to get into Treasuries versus, if not, Treasuries could further sell off and rates could go higher. We also have Nvidia reporting their earnings on Wednesday, and of course this will be a very packed day in terms of earnings. The week, there's also Walmart and Target and Ross and some other retailers reporting earnings, but Nvidia is definitely the biggest name that's reporting earnings this week. And, in my opinion, this kind of will determine the direction of the markets most likely this week. Also in the realm of Nvidia, reportedly their Blackwell chips are having some issues when incorporated into some of the existing systems that are in place. Apparently their Blackwell chips are having some issues overheating, so also talk about that, but that could definitely impact Nvidia this coming week. And then also we have gold and silver and platinum now being sold from Costco, retailers of all places, in record numbers. And I'll also try to ask the question of, does this maybe explain why traditional gold and silver retailers and outlets and everything like that have been purportedly very quiet during this whole bull market that gold and silver have had, at least so far? Maybe that's the case. So first off, talking about the Fed, in their upcoming December meeting, whether another 25 basis point cut is likely. I don't really have an opinion here, but it apparently is the case where the bond market is, very dependent, I would say, on the Fed and what direction it appears the Fed is going to cut. And remarkably, in the past few months, with the long end of the curve coming back up in terms of rates and then the short end of the curve going down, the yield curve is pretty much flat at this point. So it's no longer kind of inverted like what we saw a lot of the last 2 years. It's a much flatter yield curve, and so I will be curious to see what rates end up doing in the coming weeks. I would perhaps expect rates to begin trending downwards again on the long end of the curve, simply because they've really spiked fairly dramatically in the last couple of months. Almost immediately after the Fed's first 50 basis point rate cut, the 10-year, 30-year rates pretty much took off from there. And what this could be signaling perhaps is that investors are more fearful of another wave of inflation. So they're kind of, getting out of longer duration bonds, getting into shorter duration bonds perhaps. And of course you have the Fed cutting rates on the short end of the curve, which brings that end of the yield curve down. So at this point the yield curve is much more flat. What I would expect going forward personally is to see bonds rally eventually. Whenever eventually is kind of remains to be seen, but I do personally think that inflation is going to continue to trend downwards. Maybe it gets down to the Fed's 2% target actually fairly soon. I mean, it is very close to that. I think investors are maybe concerned that it hasn't reached that level already. Just looking at CPI and PPI, it's kind of been a stagnant last few months where inflation has ticked down a little bit, but really not sizably. And so perhaps investors are worried that in fact inflation will head higher from here. At least that is what the bond market would seem to indicate investors are thinking. if in fact that is something they're worried about. And, you know, that could be something that they are concerned about. Of course, Trump winning could have something to do with it. I think the market doesn't quite know what to think yet of his tariff policy, his foreign trade policy, everything like that. It's going to be a big change from what the Biden administration has done, their approach to monetary policy and everything like that. Of course, Trump also wants to cut taxes quite a bit, so perhaps the market is worried about that direction as well. The market could be worried that, you know, with decreasing taxes and, you know, assuming growth isn't that strong, you would still have to run fairly high deficits, assuming that government spending also stays high, which is probably a safe assumption with Trump as well. I know that there's, you know, a lot of enthusiasm, and I myself am enthusiastic that Trump can introduce more government efficiency with the DOGE, you know, Doge organization, everything like that. The issue with that is, you know, while the Doge can identify a lot of inefficiencies, as it already has, it's going to take a lot of time for that to actually be implemented and for actual spending cuts to be made as a result. So, you know, while I'm optimistic that Elon and Vivek can be successful there, I just think it's going to take much longer than they think right now. And, you know, so going forward into 2025, I think it'll take time before any kind of spending cuts can take place. You know, and it does remain to be seen just how quick this kind of Trump-induced growth can occur. Maybe it's pretty quick. Maybe companies all of a sudden are, you know, raising wages dramatically and trying to hire a lot more people and just growing a lot more quickly as they see regulation cuts coming, as they see, you know, perhaps lower interest rates coming, as I think is likely. You know, it's likely we could see kind of an acceleration in the economy in that kind of a scenario, and ideally in that scenario with less regulations and, of course, less regulations on the energy industry, you could actually see the cost of energy continue to go down with oil and gas, and just the overall exploration side of that being unhindered again. So, you know, that's an area that I'm optimistic where Trump could have probably the quickest effect on the economy of basically stimulating growth is just with the energy side of things and freeing up energy, bringing the cost of energy even lower, which it already is fairly low again now. But that does take time to trickle down through, you know, electricity and food and everything. So, and, you know, that would then in turn trickle down into monthly CPI prints and everything like that being lower, which would be encouraging in Trump's eyes at least. So all that being said, kind of a lot of action potentially coming up this week in the Treasury market as Fed members begin to speak about a December rate cut potentially. Also, we have Nvidia reporting earnings on Wednesday after the close, and this is definitely going to be the most watched earnings of the week. And, you know, Nvidia is probably the most watched earnings in the entire stock market, I would guess. You know, it's probably the most influential company right now. I actually said kind of, you know, 6 months ago actually that it would be my expectation that Nvidia would become the most valuable company in the world by market cap, and that occurred a few times since I said that. And in the last month, Nvidia has definitely overtaken Microsoft and Apple. It's about a 3.6 trillion market cap, whereas Apple's maybe 3.3 and Microsoft's about the same as well. So not to toot my own horn, but I would like to say that I was one of the first to kind of point out the obvious trend going on there of Nvidia, just kind of the exponential growth that they've experienced. And of course, investors are going to be keeping an eye on this in their earnings. You know, what kind of guidance is Nvidia giving for the upcoming quarter and then the upcoming year is going to be of crucial importance. You know, if Nvidia can decisively beat earnings again and then raise guidance again, which it's been the pattern, you know, the last 2 years or something like that of Nvidia's earnings blowing out of the water expectations. So if Nvidia can do that again, I would expect their stock price to continue to perform well in the coming months. And actually, I think it would spill over into semiconductors as a whole. Nvidia has kind of led the whole semiconductor complex higher, even though perhaps like AMD and Broadcom and Qualcomm and all the other semiconductor manufacturers' earnings haven't exactly been as stellar as Nvidia's, they have decisively improved and followed Nvidia's trajectory. So if Nvidia can dramatically outperform and their stock price performs very well, I think that would occur if they really outperform, but I think that would have a trickle-down effect throughout the semiconductor space as investors kind of see that, okay, you know, the AI trade, semiconductor trade is probably not over yet. And so I would expect that to kind of boost all the boats in the AI space as well. So, you know, my expectations for Nvidia, I think they can beat earnings again. Me personally, I don't know how big of a beat it can be. So, you know, I'm not necessarily setting a specific price target on Nvidia. I do actually think that it will rally after the earnings, perhaps most of all, just based on the sentiment of semiconductors as a whole being fairly subdued in the last couple months. I mean, yeah, you've had Nvidia basically trading at their all-time highs right now, but you know, other semiconductors have really corrected lower, and so I would say the overall sentiment in the semiconductor space is fairly low right now, actually, and so I would expect that if Nvidia can kind of restart a lot of enthusiasm in this space, I would be bullish semiconductors generally speaking. Of course, not advice of any kind, just my personal thoughts. Getting on to another interesting piece of information right now is that Costco has reportedly sold record amounts of gold, silver, bullion, as well as platinum bullion. And, you know, I'd be curious to hear from all of you if you have noticed any of these items in your personal Costcos. I have only noticed gold for sale in my Costco. So it's interesting that Costco apparently is also selling silver as well as platinum now. Apparently you can buy 1 ounce 24 karat gold bars from Costco, as well as 20 count packs of 1 ounce silver coins and 99.5% pure platinum in 1 ounce bars. So essentially just 1 ounce increments of all three of these precious metals. And you know, the gold and silver space, I can definitely see that as a decisive precious metals kind of sector. I am really curious to see what Costco's demand specifically has been for platinum since they started selling that fairly recently. But apparently, I mean, if Costco is selling platinum bars, I mean, that's got to tell you something that at least a decent amount of people are in the market for buying platinum bars, which me personally, I don't actually own any physical platinum. I do own a lot of physical silver and then some physical gold as well. But just me personally, I don't see platinum quite as much of a precious metal of sorts. Although, of course, it is used in a lot of jewelry and things like that, along with gold and silver. It just doesn't have as much of the monetary history behind it. So, you know, looking at platinum's chart, it actually does look fairly bullish. Platinum did peak back around when gold did, around in 2011, around $2,000 an ounce, and of course it's about half of that right now, around $1,000 an ounce. And you know, platinum's definitely an entirely different market. It is a more industrial metal, kind of like silver. The main market for platinum and palladium actually is not necessarily jewelry. It's more so catalytic converters. And, you know, more recently, platinum has been a material used in hydrogen fuel cells, but those just aren't really being mass produced yet. And so the main market for platinum and palladium is catalytic converters. If you were to bet on kind of a reindustrialization kind of trade, you know, a lot more internal combustion engines being manufactured kind of trade, platinum would be a metal you would need for that. And, you know, it's an interesting chart for sure. I don't necessarily see it as being as bullish as something like silver or gold right now, but I think it isn't a bad looking chart anyway. But, you know, that aside, Costco purportedly is selling gold and silver with about a 2% markup above the spot price. And, Of course, with Costco and their return policy, I would be very curious if their return policy can extend to buying, expensive items from Costco, such as gold and silver bullion. Because in theory, if you could buy gold and silver bullion from Costco at just a 2% markup and then return it a few months later, presumably you would be returning it at the price at which you bought it. And so, if if it were the case where gold and silver actually had a bear market, that could be kind of a good insurance policy on gold and silver, in the fact that you could get your initial investment back. Of course, I'm not recommending you do that, not recommending you take advantage of Costco's generous return policy in that way, but I would be curious to see what they would say about that. Yeah, they're reportedly selling platinum as well with only about a 2% markup over spot, which is pretty good. I mean, it's hard to beat that. Maybe some online retailers, some of their specials on JM Bullion or monetary metals, you could get something a little lower than that, but generally speaking, if you're buying physical gold and silver, you're buying it and you're holding it for a while. It's almost an insurance policy. So like me personally, I first started buying gold maybe 5 years ago. I haven't sold any since then. I've bought a little more since then, but and if gold really does start showing bubble kind of characteristics, let's say it gets up to $3,500 an ounce, in 6 months from now, and there's a huge mania around it, and just everybody is talking about buying gold, bullion and silver and everything like that. If there's kind of a bubble kind of behavior around gold like that, I might start thinking about selling out of mine, but definitely not right now. I haven't even started thinking about that. Silver is interesting because a lot of kind of the other silver investors I have noticed do recommend buying the physical silver, simply because with buying these ETFs like SLV, you really don't know what kind of backing these ETFs have. And so unless you're doing kind of a lot of the trading activity with silver, it can actually be advantageous to buy the physical silver, just because then you have absolute assurance that you own that silver that you allocated money to. Whereas ETFs, of course, SLV has changed their prospectus several times now, and you really just don't know how much physical silver you actually have with that ETF. Of course, you have the ETF alternative like PSLV that does have a much more robust one-to-one physical backing, and so you could probably get around it with a ETF like that. All this being said, I wonder personally if Costco selling apparently hundreds of millions of dollars of physical gold and silver and platinum now, if that has kind of shifted demand away from these conventional retailers, these small mom and pop, gold and silver coin shops that you would normally see demand occurring at. And if anything, that might explain why it's purportedly been so quiet at these traditional outlets in light of gold going much higher and silver going higher. Maybe Costco is an explanation for that. I don't know. It would be interesting to see, in coming months, if gold does start to really perform well, attract a lot more attention. Silver does as well. If that really does stimulate enough interest to where these traditional gold and silver outlets are actually seeing a lot more traffic. That would be interesting to keep in mind. But, if anything, I do expect this coming week to be an exciting one. Of course, Nvidia's earnings, some Fed members talking, seeing gold and silver, the market's there. I do think they likely bottomed last week. Gold likely bottomed. Silver did too, in my opinion. So I would expect these to continue to head up from here. Their bull market trend is still intact. I think it did reset sentiment in a big manner. And so I'm actually very bullish going forward on both of those metals and the miners. Of course, not investment advice. None of this video is. Just hoping to make it for your enjoyment going forward into this coming week. I hope it's a great one for all of you guys. I'd love to know what you think. about all this in the comment section below, and I hope to see all of you again at some point.